If you're in the group feeling optimistic because stocks have rebounded to bull market status, the Federal Reserve appears to be at the end of its tightening phase, and the anticipated recession seems to have been indefinitely postponed, the following information might dampen your spirits. Based on conventional measures, the U.S. housing market is overpriced by a staggering 40%. However, this number, while eye-opening, does not warrant despair for homeowners and single-family property investors. Admittedly, prices are projected to trend downward over the next 15 months, but not nearly as dramatically as the startling headline number suggests. The explanation for this lies in unique, novel forces at play, such as the work-from-home shift, which should largely mitigate the necessary price adjustment to restore the balance between housing prices and new, improved market fundamentals. This intricate perspective, suggesting a shift in the basics that indicates significant overpricing, is provided by one of America's leading real estate gurus, Sean Dobson, founder and CEO of real estate behemoth Amherst. Housing Market Forecast for 2023. It's crucial to clarify that Dobson's assertion of excessive price inflation doesn't imply an impending catastrophic drop, akin to what happened following the Great Financial Crisis. He identifies several positive forces that should significantly soften the anticipated adjustment. As Dobson conveyed to Fortune, it's certain that prices are currently considerably inflated compared to historical norms. Despite this, Dobson is confident that other factors, including a decrease in rates and sustained strong incomes, will thwart drastic declines. However, these forecasts could fail to materialize. Is this another 2009 and 2010? We don't think so. Probably not even close, states Dobson. But when this price condition occurs, the world is a dangerous place. Amherst's 40% overvaluation estimation doesn't encompass the entire United States, but rather almost 36 cities where Amherst purchases and leases single-family homes. The portfolio has a high concentration in Sunbelt cities like Tampa, Atlanta, Charlotte, Dallas, Phoenix, and affordable Midwest strongholds such as Louisville, Cincinnati, and Kansas City, among the nation's fastest-growing markets. Despite not covering gateway metros like New York, Los Angeles, and San Francisco, in this reporter's opinion, Amherst's numbers are a good approximation for the overall national market. Amherst's fair value measure relies on traditional economic factors that have historically influenced the supply and demand for housing. These include household incomes, mortgage rates, construction costs, and demographics. This model is similar to the approach taken by other real estate analysts, but where Amherst differentiates is in the data used. Their vast collection of proprietary information combined with third-party data creates a uniquely comprehensive and accurate picture. According to Amherst's model, the U.S. housing market is currently priced 40% above its fair value. This is an astonishing figure, especially when one considers that during the 2005 to 2007 bubble, housing prices peaked at around 30% above the estimated fair value before they fell drastically. However, this 40% overvaluation isn't uniform across the country. Certain Sunbelt markets like Phoenix and Tampa are estimated to be overpriced by more than 50%, while Midwest cities like Cincinnati and Louisville are closer to 30%. This variance is due to a combination of factors such as differing rates of population growth, changes in income levels, and varying local supply constraints. Nonetheless, Dobson isn't predicting a crash like that of 2008 to 2009. Instead, he sees several mitigating factors that should prevent a similar catastrophe from unfolding. One of the most significant is the low interest rate environment, which makes housing more affordable than it would be otherwise. Moreover, unlike the previous bubble, which was fueled by risky lending practices and subprime mortgages, the current market has been driven by healthy demand and constrained supply. Dobson also points out that the shift towards remote work, brought about by the pandemic, has increased the demand for homes in suburban and rural areas. This trend is expected to continue, which could help sustain housing prices in these regions. Furthermore, the introduction of artificial intelligence in property valuation and decision-making processes, which Amherst has pioneered, has helped create more efficient markets and may also act as a buffer against a potential downturn.